Bring me the money. That's what it's after. That's what it's about, isn't it, Caroline? Bring me the money. We'll do our best to help you go and allow the money to come towards you, maybe. Any info most welcome, nothing specific. Thanks, Caroline. Nice to see you. Well, not see you, but see you on here. I haven't spoken to you for a little while.
Good to see you, Ed.
I can hear you, which is
welcome, everybody.
Yeah. Hello. All right, let's get going. So, absolutely delighted and excited today to be working again with Flo Chadaway from Spring Accountancy Services. She's based in Nuneaton in Warwickshire. She's an absolute superstar when it comes to accountancy. We just thought we could get our heads together to help as many people as possible in business. Just take something away to be able to get their cash in a better position, get their budgets better, get their cash flows better, understand them a little bit more, and also understand what can affect them as well, and how you can make adjustments and tweaks to those to really drive your business forward. And a lot of the time in business, because as business owners, as we go into business, we do it through our passion. We do it because we love doing something in particular, and maybe we've had jobs in the past where we didn't love it so much. So this is an opportunity for us to take the mantle on ourselves. But we're never taught about business. We don't get taught that at school. We get taught a bit of maybe Smithsonian economics or something like that, a bit of supply and demand, but we're not taught how to run a business. So it's really great that you've taken the time out to educate and support yourself to improve, because that's what it's all about. We're all learning. Every day is a learning day, as they say. So I'll introduce you properly to Flo, or let Flo do that herself. But before I do that, I wanted to share this next slide with you, which is all about the cycle of business. Now, if you think about what I just said, when you started up in business, and maybe now you have a team as well with you. And if you don't have a team, then you are the team, by the way, just to let you know. So if you don't, even if you're not working with anybody externally, you're effectively every single role. But there are four main areas to look at in a business. There's you, the team, your customers and the people that you serve. And there's the business, because actually it's the business that pays the wages. It's what gets you the income coming in. And what tends to happen in most businesses is that all the customers want to come to you because they want to talk to you. They want to build relationships with you. You might have some issues that they want solving. There's lots of business owners that I know that have started, and as they've got through to growth, actually, one of the biggest challenges is removing themselves from the business, because they are the business. Everybody knows and likes them. But also the team come to you. They've got problems, they've got issues, they come to you, they ask you questions. And also the business comes to you, the administration, the accountancy, the marketing, and so on and so forth. So all of that all comes to you. And guess what? There's a big arrow pointing right at you all the way through this. And what we want to make a shift on today is moving away from that arrow where everything is driving to you, to being able to be more cyclical, and actually allow you to look after parts of the business and allow the business to look after you. And we'll share that with you at the end. So a little introduction about me. I'm Ed. I've spent most of my life in corporate, but coaching. I'm a high performance coach and business coach. And my job is really just to support individuals to shift from where they are to where they want to be quicker than they might do on their own. And I have been now in Action Coach Hinkley for just over 2.5 years, believe it or not. It's amazing how quickly that time goes past. And I'm just delighted to be able to support the local economy and local businesses just improve their performance. So that's me. Flo, hello.
Hi everybody. So my name's Flo, and for those that don't know me, I'm the founder of Spring Accountancy Services. which is a small accountancy firm to help small businesses like yourselves move forward. Instead of just ticking by, actually manage to grow your business in a way that you want to. So I've got 14 years of accountancy experience, gaining 2 qualifications during that time, and I've worked with hundreds of small businesses like yourselves. So let's move forward with what we're going to be learning in today's presentation, and what we want you to gain from this whole presentation today. So budgets and cash flows, why bother? What is important about them, and how can they even help your business? We'll go through the differences between budgets and cash flows, because a lot of people don't see what the businesses, what the differences are there between them. We'll then move on to looking at just the budgets and how you can create a budget, even the basic of budgets, with some simple steps just to help yourself start there. And then move on to cash flows, where to start with the cash flow. And then Ed's going to summarize some quick and great tips of how to move forward with both your cash flows and your budgets and actually use these. So are you winging it at the moment? If you haven't had a budget or a cash flow before, then you might think, why even bother? So imagine this. Picture that you're allowed out again after all of this, and you've got a really important client meeting or an appointment somewhere. Would you just get in your car and go? No, you would think about, how long is it going to take to get there? What time did I book it for? What do I need to take? And you might even check details like how to get there if you've not been there before, maybe parking, or maybe even checking the traffic before you get there to make sure that you're there on time. There's all of that is simple planning. So why wouldn't you take this approach to your business? Most business owners, they know what they're selling, they know who they're going to sell to or what service they're offering. They know about the marketing, but they don't like to think about finances at all. And a lot of people think that their budget is, their business is too small to do any planning. Like, what's the point? And there's no point setting goals because it's quite a small business. But one day you might wake up and it's not a small business anymore, and you might have cash flow issues, or you don't know where you're going with it. So it's so important to set goals or plans for the income and the expenses, and understand finances is key to working towards your business and your personal goals and how they tie together. And budgeting will put you in the control of all of this. So if you're winging it now and you're doing just fine, imagine where you could be if you had a plan and goals and a budget and a cash flow to get you there. You could be, it just could be endless. So let's look at the differences between budgets and cash flows. So a budget, this is basically the list of income. It can be really simple to start off with, the list of all the incomes that you might expect to receive, and then how much you might expect to spend to get these. The income and expenditure targets are normally allocated into different headings that would match your profit and loss accounts. So if there are different sales, you could have different headings for those, and different expenditures. This can be really basic summaries of these, or you can go into a lot of detail if you want to really focus on one area. And it gives you something to monitor against the actuals and make sure that you're not just going and spending anything anywhere on whatever you want to. And often a budget covers 12 months period, which is in line with your financial year. So this differs to a cash flow. By a cash flow is the document which shows you all of this cash that's coming into your business, when are you actually going to receive that, and all the expenses that are going out. If they're split over a 12-month period, instead of paying it all in one lump sum, anything like this, that will show that there, and all the costs that you have, not just your expenditure. So this also doesn't have to be a 12-month period. This can be the period that you're running in, so your financial period. This could just be the next 3 months, the 90-day plan that you've got, or it can be a 5-year plan that you've got there, and see where you're going to end up within that period. So let's have a look at some figures to match this. So to really make it stand out, and the best way for you to see why using these different reports can make quite a big difference to your business, we can just have a look at this by using some basic figures. So let's have a look here. We've got a startup consultant and they're VAT registered. So let's say they've got a contract for 6 days a month for £250 per day. So we're expecting an invoice of £1,500 per month. So we've got those there. You can see on the budget side, we've budgeted those in for the next 3 months. You've got £1,500 for each of those months. But when you compare it to the cash flow, on the budget as well, if you're VAT registered, you don't include your VAT because this doesn't affect your profit and loss. The VAT is there and that goes onto your balance sheet because that's something that you've got to pay over. You're just basically holding that for the revenue. So on the cash flow side, so this consultant, she gives her customers 30 days to pay. But then she doesn't chase them because she's brand new and she doesn't want to upset them. So they end up paying in 60 days. So the first 2 periods, she's got no income at all. Then on the 3rd month, she gets paid for that first invoice that she sent out in month 1. And that includes VAT there. So she's actually receiving in cash in her bank £1,800. So then on month 4, we've got exactly the same. So that's the month 2 invoice has finally been paid now. And again, she's got £1,800 in her bank. Now, if you're comparing this to the previous side, where we've got the budget, we've got 1,500 versus 0, 1,500 versus 0, 1,500 versus 1,800. You can see the differences there compared to what you would have originally thought out to what was actually being received cash in the bank. And then we move on to month 5. Month 5, it's only £900, but this is because we've got the £1,800 cash in from month 3, but then we've got the VAT bill because we haven't budgeted that into there because we don't budget for for anything that's going to be on the balance sheet. But that's why it's so important to have a cash flow, because then you bring in all of these figures that you may have not realised about. So why is this important then? So on your cash flow, you might have thought, right, I've got a bit of savings behind the business, so I'm going to have an office. So I'm paying rent on that office of £750 a month. Yep, to start with, I might need to use some of my savings for this. So in month 1, if we were to include any expenses like this office, month 1, you've got 0 cash in, but £750 going out for that rent. The same in month 2. Then in month 3, you think, yeah, this is going to be okay. I can pay £750 out because I've got this money coming in now. And then we get to month 5, we've got £900 coming in, £900 going out VAT, and then the £750 going out for your rental property. This doesn't leave you a lot in the cash flow. And being able to see these differences and then plan accordingly is so important. And you can see here from these 2 situations that we've had a look at now, how different the budget and the cash flow can be. And this, obviously, the picture that we've got here, there aren't many costs involved. And like I've discussed, with having that rental property or any other expenditure that you've got there, it can make a massive difference. So where to get started on your budget?
So, Flo, on that, because they're really, really key. And everybody, I've put a comment into the chat just to say if there are any questions that come up, or if you're feeling brave, unmute and just ask away. One thing that I see a lot of business owners will do is exactly as you described, is put the VAT in their budget. So what negative impact will that have on a business if they did that?
Well, the VAT shouldn't be in the budget because the budget is reflecting your profit and loss. So you use your budget to be able to see what profit you're going to be making, or what sales you need to budget for to cover all of your costs in there. Now, we don't include VAT in there because it doesn't affect your profit and loss. Your VAT is just collected on behalf of the revenue. So when you're collecting VAT on your sales, that's just you collecting it, for the revenue to pay over. And the same as when you pay it over on any expenses, again, that just is being paid over and stored. You never own that VAT. You just need to pay that straight over to the revenue when you do your VAT return. So having it on your budget, there's no point having it there. It doesn't affect you. It's just falsifying your budget, and you're not going to be able to use that to support your business and to see where you want to move that forward. Whereas having it on the cash flow is really important, because it does affect your bank. It does affect what's in there. To start with, a lot of people see that they're getting a lot more cash, and then you get hit by when you need to pay that over. And then if you haven't included that, it's an extra expense that can really shock people, especially if they've been doing really well to start with in those first couple of months. And when you're getting in that routine of having more cash to start with, but realizing why it's not yours. And that's why so many businesses, they do set up separate bank accounts and transfer that amount straight over to a VAT account, so that they then don't have to worry about that.
Yeah. So question there from Amanda, how does it differ from a sole trader not paying VAT? I'm assuming you just don't put it in either, right?
Well, if you don't pay any VAT over, that is an expense for yourself, and therefore you can include that in your budget from that point of view. But it does depend if you're VAT registered or not, because you're not going to have that VAT to pay over. But you also won't be including any VAT on your sales, because you can't charge VAT if you're not VAT registered.
Yeah. And some
Great
businesses,
question.
of course, get the money in on the same month that they invoice as well. So I suppose that will factor through, and actually makes, let's assume a business is non-VAT registered and they get the money in on the same month that they invoice. I imagine their budget and their cash flow could look very similar.
Yeah, often they can do. Obviously, this one that we're talking about here is kind of just to show how dramatic that impact can be, and why it is important if you do have any terms. But if you are if you are receiving the income straight away, then obviously there will be a lot similar, the budget and the cash flow, and that will obviously be quite a positive thing for your business, because you don't have these great gaps. But what we're trying to show here is how different it can be and how shocking it can be when you get to, for example, month 5 and you've got a lot more expenses. Now, the VAT element, that's just something to really make it hit home to people. Well, there's other things. If you're not VAT registered, it might be that you have an annual subscription that's a lot larger, or a membership fee that you come to at the end of the year and you haven't factored that in, and it might use the whole of your cash in that month to pay that subscription or membership or something like that, or even your tax bill. If you're a sole trader, you do not include your personal tax liabilities in the budget, because that's nothing to do with your actual sales and expenditure, whereas it does need to go in your cash flow, because if you pay large amounts of personal tax, whether you pay payments on account or just the year-end balance, that does need to come from somewhere at some point. So it's really good to factor that in, to have a cash flow for that.
Yeah, and it's something that I see people missing their cash flow is that exact point. And then they miss the tax bill.
Yeah, and so many people come to January. I see it all the time, and they get to the end of January and they start panicking about how they're going to pay their tax. And this is just one of those things, isn't it? It's the same type of thing. And a lot of people do they do cash flow without realizing that's what they're doing. They do, because you have savings account. That's part of cash flow, keeping an eye on your cash flow without realizing it. But this is just a way to plan even more for that cash flow, so you can continue to have savings. But savings is a similar way of having a cash flow without realizing that you've been doing that.
Yeah. So there's another comment here from Amanda, but I actually think the next slide is probably going to shine a light on that. So it's around, so your cash flow needs to show all expenses. So I'll hand back over to you, Flo.
Yeah, so there are 3 key areas to focus on when this is like a really simple budget. So review all your different lines of income. So if you have various different lines, for example, a membership, one-offs, consultancy, all these different things that you might have, you need to you can either put them all in one, but it's really useful to allocate them in the different areas, so that you're making sure you cover everything. And if you're a sole trader, you need to include things on there as well, like bank interest and things like that. So everything that you've got coming in from all different areas, that is your income for your budget. And you can do that each month and have a look at those. And it is what you expected. So if you're brand new, you might not know what you're going to get in there. So just think about what you're expecting. So if you know how many days a month you can work and how much you can earn in those days, then just use that as your budget to start with. If you're further down the line and you've been trading for many years, you might know what you'll be able to put on your budget. And if there's anything seasonal, so for example, if you're selling ice creams, you know that you're going to do a lot better in the summer and you might have that uplift in there. So budget for those, do it on a monthly basis, each month what you're expecting to have in. And if your gifts, for example, it might be a lot that your turnover is a lot higher towards Christmas. There's these sort of things to have a think about when you're doing it. But the basic way to get started with your income is just list what you're expecting each month for the next 12 months. Then moving on to your costs, all expenditure, yes, Amanda, it needs to be included in this. So there are different areas. Start with your fixed. If you don't know where to start, look at your bank, look at your standing orders list and your direct debits list and list those ones out. So you've got things like your rent, your phone, software, anything like that you pay exactly the same every single month. That's a good start. Then you move on to your variable costs. So these things that might vary each month. So for costs of sales, if you are making a product and you know you're going to make this many of sales, you will know how many materials you need for that. If you need to include shipping and travel for expenditure, anything like that, that might change every single month, depending on the sales you've got, factor that in. So again, like I said, if it's an ice cream seller, they know that their costs are going to go up in the summer when their sales go up in the summer and then go back down again. So make sure you factor that in. And then obviously there's going to be the one-offs that we've talked about, such as annual subscriptions. Maybe you have to do courses every so often. Maybe you're going to be, you know that you're going to have to factor in buying a new laptop or a new printer in due course. Make sure you keep an eye on those types of things that you might need to include, because they're the ones that really catch people out, the big one-offs that they forget to think about. So have a think about the last 12 months, those items that you might have bought, and see if you think you're going to be needing to buy those in the next 12 months. And that covers all of the expenses there. You do not need in here, so the VAT that we talked about, there's no tax in here, no loan repayment. So if you've got a loan repayment, you might have the interest in here as an expense, but you wouldn't have any, the actual capital loan repayments they're not included in here. So step 3, all of the income streams, less all of the expenses, hopefully is positive and a profit. If it is not, then this is why it's so important. You can see where you need to cut or where you need to grow. And I know that Ed's going to give you some great tips on that in the future. But now, once you've listed that budget and you've got to that bottom figure, you will know that you can review that and see what steps you need to take now to make sure it's a profit. Are there any questions on that one so far? Hopefully not, but stick them in the chat if there are. So next we're moving on to the cash flow. Simple steps to get you started on your creating your cash flow. So it's so important to have all of your historic data to date up to date, because then you can project for the future and you can use this and you've got a great starting point to move forward. Then we can use the budget that we've created already to start with steps 2, 3, and 4. So step 2, your sales forecasting. If you're brand new to this, or it's a brand new business, then it is a little trickier to start with, but you just need to have a think about that. So the only difference would be the timing that we've discussed. So obviously, if you're giving people longer to pay, you need to factor that in, like we looked at when we did the figures in the differences a few slides ago. And then also, if you are VAT registered, including the VAT here. So you're working out when that money is actually going to come into your bank account. Step 3 is the same a sort of process, making sure that you're grossing up for VAT if you need to, including the VAT elements, but then here also including those loan repayments, the VAT liabilities that you might be paying, any tax liabilities that you might need to pay. And that's the same with step 4. So just use your budget that you have got, but then alter it slightly for these timing differences, for the VAT and the tax, and then you'll gradually build a picture up. It's really important to know that, and this is step 5 here, that this is a working document. It's never going to stay the same, because you might have sales pop in that you didn't have in your budget for, but you'll be able to update your budget and update your cash flow, document, and include these, and see maybe that you're going to be in a better position than you'd originally thought about. Or if there's anything else to add in, like an unexpected cost, that you can have a look and check in your cash flow, then make sure that you can afford that. And a great example of this is if your insurance is coming up for renewal and you normally pay it on an annual basis, you can use your cash flow to see whether you can still afford to pay that on an annual basis, or whether it would be a lot better off for your bank position if you paid this direct debit over the 12-month period this year. I know a lot of people are starting to do things like that they haven't done previously, just because we really need to in this time. It's been a tough year for so many people, and a tough year on people's bank balances. So having a cash flow there to be able to see and where you can smooth out your cash flow over the next 12 months is really, really important.
So, Flo, a question has come in from Dawn, and I think this is shining a light on what you said on the budget around not including the capital repayment, but allowing to include the interest. And so, why not include the capital loan as it needs to be paid?
So, an example to show the example of this is if you are including, so if you've bought, you've taken out a loan to then buy an asset. So when you include the cost in your budget of the laptop, if you then include the loan repayments as well in your budget, you're duplicating that. And the budget is only showing the profit and loss figures, whereas a loan repayment go against something that you owe. So that is on your balance sheet in your accounts, and that is just reducing down an amount that is never technically yours anyway. So there's 2 reasons there as to why you don't want to include that on your budget, but you do include that on your cash flow.
And that's the difference, isn't it? It's about what to include in the budget, and then in the cash flow, actually the capital repayment needs to be included in the cash flow because it's cash leaving your bank account.
Yeah.
Hope that answers that question for you, Dawn. So that's the blast through budgets and cash flows, and we're going to suggest that you take some time to talk through with Flo on your budget and cash flow. At the end, we'll let you know how to do that as well, and how to get in contact. It's just really good, disciplined activities to do. Look at your budget regularly. The one thing, and your cash flow regularly. One thing that I hear a lot of business owners is either they don't do it, or actually the review is not prioritized, let's say. It's not done a lot of the time. Even with what's been happening over the last year with COVID, a lot of people just haven't reviewed their cash position, and they've just basically been winging it, as you quite rightly said at the beginning. And of course that gets you into trouble. I think there's a couple of things that are worth mentioning. That if you do these things, not only will you know your position from a cash perspective and you can budget effectively, but also you can have a conversation with lenders which are much more open to seeing you as a positive risk rather than a negative risk, and for you to lend against. So if you can imagine, you find out looking at your cash balance that next month you're going to run out of money, and you go to your bank account, so you go to your bank manager for a loan, they may be less inclined to say yes that if you can foresee that and forecast that over a quarter, let's say. So that's a good reason. And there's loads of different tips and techniques that you can do to actually close that cash gap. Flo, you mentioned it before around this is the budget of what I might be bringing in month on month, but actually I'm not going to get paid for 2 or 3 months, and that cash gap and managing that gap. Always remind yourself of that, those little yellow letters that are on the train side between where you are and the door of the train. It says mind the gap, you know, and if you think of yourself, well, actually, how do I mind the gap in my business, and the cash gap being that gap, it's always good discipline to focus on it. So spend time with your
it's so
accountant.
important, and there's so many even really simple basic ways to get through that. And I know you're going to go through some shortly, but if you are doing your budget and your cash flow and you feel like you really need to tighten up one of those gaps or anything like that, there's so many little ways to have a look at it. For example, just chasing people. In the example, excuse me, I mentioned earlier, she felt that she was new and she couldn't chase, and I see that all the time, that people are really scared to chase their payment, the amounts that are due to them. And there's no reason not to. At the end of the day, if they've had their service or their product, then chase it. Make sure that you do. People, a lot of the time, people have just forgotten, or they're just slow because you haven't chased, and they think, oh, she doesn't need it yet, that's fine. So it's so important to do little things like that.
Yeah, if you haven't got a late payments process in your business, that might be something that you need to look at. And actually, one of the businesses that I've worked with had a huge amount of that. And we put a process in place. And of course, a lot of the relationships that you have with long-standing customers don't always lend themselves well to having a process that says, excuse me, you need to pay, you're late, because people fear. It's the emotions, it's fear that they're going to lose that customer, or they're going to create a bit of negativity, or have a difficult conversation with them, or maybe even lose that customer. If you put a process in place, a process is very logical, and that logic can actually help you bridge the gap between what you're feeling and the relationship with your customer. And it happened like that with a client that I worked with, who basically had a lot of money waiting. And we put the process in place, and of course they got the phone calls going, what are you sending me this letter saying that I'm overdue, and I always pay. You go, yeah, well, yes, let me just have a look. We've got a system in place, because you're on 30-day terms, aren't you? And oh yes, it looks like you're 60 days late on your 30-day payment term. So the system's working, that's great. So when will you pay? And they actually cut, just by having that really logical conversation, took all the emotion out, and it meant that they got 50% of what was owed to them, which in their case was worth hundreds of thousands of pounds, that they could then reinvest back in their business on stock and growth and marketing and team. And it meant it was a huge uplift for them in their business.
Definitely. I think a lot of people, if you haven't had this process from the start, people are scared to introduce it. But like you say, if you sometimes if you feel like it's going to upset anybody, which it really hardly ever does, just drop an email before you start using that process, or have a phone call with any of those clients that it's really going to bother. And most of the time it isn't an issue at all. It's more in your head than it is anywhere else.
Yeah, fear is false expectations appearing real. So yeah, you're right. Flo, there's a question here from Nicole, which I think is a great one. Have people paying me the wrong amount of money because PayPal deducts some? I'm not sure how to handle this. This will be different between budget and cash flow and how it pulls across.
Yeah, so the PayPal deductions are the PayPal fees for using that service. And when it's deducted like that, either you need to factor that in and charge a little bit more to be able to increase your fees overall, or you need to just make sure that you include that cost in your budget and just factor that in for when you're making a profit, that you're going to have little things like the PayPal fees in there. So there's two ways to have a look at it there, whether you just factor that in, and the fact that it's going to be an expense throughout your business, or increase the fees slightly for that.
So Flo, knowing that PayPal take a percentage and other companies like Go Cardless and so on do the same thing, would you put in, let's say it was £100 and there was a 1% fee, would you put in your budget the fact that you were going to receive that £100, but also in that budget kind of put something in an Excel spreadsheet that automatically calculated the 1% fee, and therefore in
Yeah,
your cash
so
flow you end up with £99?
yeah, so you always put the total amount into your sales that you're going to receive, like you say, the £100, and then in Excel it's quite easy to just put in a little formula and you spread that through the whole month. And if anyone isn't sure or doesn't like Excel, I'm happy. I've got some templates that I can send over, and I can tell you how to do formulas like that so that you can pop those in. So if anybody wants anything like that, then please just drop me an email afterwards or a message on here and I can send those over. But yeah, it's good to build that bigger picture. And I know so many people over the past year especially have had these extra expenses that they're not used to using, and some people are a bit up against it as well, because so a lot of people used to receive a lot of cash and things like that, whereas now we're using Go Cardless and PayPal. And the great benefit of this is that you get paid a lot quicker. And if in a lot of businesses, that small cost of the fees of any of these payment services means that you get that money in so much quicker. It is really worth it in that. And I know a lot of people are wary of it, or they don't want to lose that small element. But this is where getting that cash in quicker so that you've got that cash to spend, it makes a big difference.
Yeah, absolutely. I love that tip around just factoring it into your costs if you need to. Yeah, save you a lot of money, energy and effort in the meantime. Right, so keep bringing the questions in. Some really good questions there. I hope it's helping out for everyone. And what I wanted to share with you is around 5 different ways. It's the magic source of business to grow your business. So most people that I talk to know how many customers they have, what their revenue is, and they generally will know probably at the end of the year how much profit they've made. Now, that's a really good place to be, and it is really important. We also have to remember that these are the results, and you can't affect results, but that's just the outcome. Okay, so you can't affect that, but you can affect the background of it. So that's what I want to talk to you today about. Anybody who's already working with me, and some people on this call that will know how passionate I am about these numbers, and knowing that these levers in your business are the things that really make a difference. So you can see on here that we've got number of customers, we've got revenue, and we've got profit. So the other 5 areas are those areas that we can affect. They are the levers in the business. And if you're not measuring these at the moment in line with your budget and your cash flow, then you're definitely missing a trick. So here's an example of leads. So just imagine you've got a business here. This is for 1 whole year. They've attracted 4,000 leads. So these are people who are interested in doing work with you. Maybe they've asked for a quote. If you're in store, maybe they've walked in to have a look. Maybe they've looking for a proposal. Maybe they put something in your basket on your e-commerce site, but it hasn't quite converted yet. So these are people who are interested in doing business with you. And then you get a conversion rate. So now they become a customer. They've actually purchased something from you. So in this instance, we've got 1,000 people that have become a customer of this particular business. And again, that's the outcome. So now we got the number of transactions. How many times are these people buying from me in a year? In this case, it's 2. So twice a year, a person comes along and buys from this company and spends on average £100 per transaction. So this business has got a revenue of £200,000. And now if we times the outcome of that, so the revenue by the profit margins of the business of 25%, then this business has got a £50,000 profit. So you can see from what Flo was talking about, from budget and cash flow, Actually, if we're going to affect some of these levers, we need to be massively in control of our budget so that we can control our costs, control our marketing spend, control our resource spend, our staff and so on and so forth. And at the same time, try and put a plan in place to grow the organization and have the cash in the business to do that. So how do we do that? So most businesses will take a 10% approach to growth. I think it's a British thing because some countries tend to do it slightly different. But if I talk to a business owner and say, how much do you want to grow by next year? They tend to say, well, 10%, that'll do. And that's the approach I want to take with you today. But rather than 10% on the profit, so raising it to 55, I want to take 10% approach on all the 5 levers, just to see what happens in your business when you do that. So in this example, if you were to do that, you're going to take your number of leads and increase it by 10% to 4,400. And again, think about the budget. I'm going to need to do more marketing. I'm going to need to do better marketing. I might do some Facebook ads and do something slightly different, have a larger expenditure there to go and get those leads. Leads tend to be the most expensive thing to focus on in a business. Out of all the 5 levers, it tends to be the one that takes more energy and more effort. But let's just assume that we can attract 10% more leads and we can get 10% better conversion rate. Well, how do we do that? So we could do that through better sales processing, sales training for the team that are doing sales, objection handling training, better scripts for the sales process. There's a bunch of stuff that we might be able to do to work on our conversion rate. Now, again, comes back to the plan, some of which is going to need to go in your budget and your cash flow, some might not. For this business now, we've increased the number of customers to 1,210, and we're going to ask them to spend more frequently with us. If you think about McDonald's, love them or hate them, they've got a great system and a great process in place. Everybody jokes and laughs about the phrase, do you want fries with that? But we hear it. And the reason why McDonald's always ask you, do you want fries with that? Is because it makes them millions and millions of pounds every single day across the globe. So what's your version of that? What's your version of do you want fries with that? Just to try and upsell in your business. And then there's the average spend. Now, one of the quickest ways, Flo, you mentioned it earlier on, if you take the PayPal example, one of the best ways to get average sale prices up is put your prices up. Think about when was the last time you put your prices up, and if it was more than a year ago, maybe consider whether that's something to do. Again, I understand the fear factor and it might affect your conversion rate, but it generally doesn't affect your conversion rate as much as you think it does, unless your price elasticity is incredibly tight or the market's incredibly competitive in that area. So this business now, in this example, has increased their revenue to 292, but they're going to look at their profit margins. So they're going to look at efficiencies, effectiveness. Flo mentioned about insurances. Maybe they've gone out and can see that coming up, that they're going to have to renew their insurance, and they've gone out to get better quotes for their utilities, better quotes for suppliers if they're manufacturing, and so on and so forth. So for this business, if they've hit the 10% increase in every single one of these areas, and look, not every business can do that. I know there's people on this call that they can't put their prices up, actually, because maybe their suppliers are dictating how much they can sell a particular product for. And if that's the case, then you might need to factor in a slightly higher increase in the other areas to compensate for that. But in this example, the 80,000 profit at the end is actually a 61% increase across the whole business. So what do you need to do to be able to get to 61% increase in the business? And if you could just imagine for a minute, sitting where you are right now in your business, if you could have a 61% increase on a positive profit next year, what would that feel like to you? And the answer is clarity, crystal clear clarity of plan. You've got to come back to starting with the end in mind. What is it that you want to achieve over the next year? And how can I do that by getting more leads, better conversion, more people spending more frequently, with me and better profit margins throughout. All comes back to budget and cash flow to make sure I can invest in the right things in the right way, or maybe even get some finance put in place so that you can do that. I've played with some figures here, but just imagine your business if you doubled everything. So 5 things been increased by 10%, but here what we're doing is we're doubling everything. And some of you out there listening today will have a 10x mind or a 10 times build mindset. And this is the magic of these numbers, that you can take a business and double everything and go from £50,000 profit to a £1.6 million profit. And those numbers might seem a little bit crazy and kind of out there, but again, with the right plan and the right stepping stones and the right guidance and support from people around you, this can be achieved. And think about where some of the businesses that we know are incredibly famous right now, Amazon being one of them, where they've been and where they've got to and where they're going. They've definitely got that mindset. So it's your choice at the end of the day. But planning, crystal clear clarity, and sticking to that plan and accountability to deliver it, that's really where doing those few things every single day in the right way will pay off over a period of time, that cumulative effect. Now, I've kind of come full circle. And if you remember right at the beginning, I shared this with you. It's the arrow of despair between your team, your business, and your customers all coming towards you because you're the business owner. And we're all wearing all those hats all the time. And it can be incredibly stressful, can be incredibly lonely as well. And there's a mindset shift to be had here. So if you are in control of your numbers, you're in control of your strategy, you're in control of your cash flow and your budget, you can also be in control of your business in this way. And the shift is to change the arrow to this circle, this cyclical focus. Your job as a business owner is to look after your team. You look after your team by paying them on time, being a great leader, training them to the level they need to be trained, giving them an amazing environment in which to work, appraising them and supporting them, and paying them on time. For goodness sake, pay them on time, right? So all of those things, as an owner, if you look after your team's job is to look after the customers. And they do that through great customer service, through using and delivering the right processes to support the customer journey, getting things on time, in full, and on spec to those customers. Your customers will love you for that. And as a result, they will buy more from you, and therefore they will look after your business. They will pay you on time. They will pay you the right amount of money, which means that the business can look after you. And we're all in business to make money, right? Otherwise we wouldn't do it. And therefore, if you've got your eye on your team, looking after your customers, then the business will effectively look after itself because it would deliver to you in that way. So that's taking that paradox from the arrow of despair all the way through to a nice cyclical approach to your business so it looks after you. Now, some of this stuff that we've shared with you today, and please put questions, comments, anything in the chat, we will answer those for you. But all of these things that we've been talking to today will take you a little bit of time to get your head round. Some of you will already be doing some of this stuff incredibly well. My question is, how well and how much more can you get? How can you increase 10% on what you're already doing based on what Flo and I have shared with you today? And this is around moving and adapting and growing yourself so that you can deliver a better life, a better lifestyle for you, you know, having the life goals achieved that you want to achieve. I know, again, some people on this call and some of their life goals are phenomenal, but without their business, they're not going to achieve it. So they really got to then focus on themselves, being better, improving themselves to be able to deliver that lifestyle that they want. And I love this quote by Jim Rohn that, you know, business is pretty tough, particularly right now. but never wish it was easier. Just wish that you were better, because when you're better, it becomes easier anyway. And to help you become better, Flo and I have got this challenge for you, offer, gift, whatever you want to call it. But for everybody on the call today, I am gifting a coaching session too. So if you're not working with me right now and you're not coaching, come and have a conversation around what your goals might look like for the future and what your 5 ways numbers might look like as well. And for Flo, what are you offering everyone?
So a business health check. So if you want me to have a look at the figures that you've done so far, if you've done a budget but you're not sure what you're doing with it, or you don't check it on a monthly or quarterly basis or annual basis, I can go through that with you. We can have a call and one-to-one as well, and just go through that business health check and see where you can improve and what steps you can put in place.
Super. So that's really it from us. These are our details. These are our contact details. If you want to talk to us, then add it into the chat. We will email you afterwards anyway, and we will gladly help you as much as we possibly can. I think both Flo and I are incredibly passionate, as you can see, about helping businesses grow. We're both really passionate about our local economy and focusing on making sure our local economy keeps on growing off the back of what we've been through recently with COVID. So if we can help you with anything, even if it's having a conversation with me about grants, that's fine. Just drop me a line. I'm more than happy to help. Flo, anything from you before we finish?
No, thank you for everyone for attending today, and I hope you've all got at least one takeaway from this. Even if that takeaway is just to get in touch for some help, that can be fine.
Yeah, it'd be really good actually, just before we finish, one action or one takeaway that you're going to commit to yourself to do off the back of this would be great. So we've got 3 or 4 minutes left. What's the one thing that you're going to do as a result of today?
Amanda's raised her hand. Does that mean you want to chat, Amanda? Where's she gone? Asked.
If you do, just unmute yourself and crack on, Amanda.
Is that me or is that Amanda Box?
That was you. You put your hand up. Did you not mean to?
No, I've put a comment in saying it was brilliant. Thank you so much. Can you see that comment?
You can, yes.
Yeah.
Thank you very much. Yeah.
So I put that in, but I don't know how my hand's raised. But Jacqueline Leake, have you raised your hand? Because somehow I think there's 2 Amandas, isn't there? Oh, I don't know. Yeah, I think the other Amanda isn't me.
Amanda Box has asked, raised her hand as well. Did you have a question?
No, sorry, that was me just flipping over. But for me, just to say, the big thing is the cash flow and budget, and I think a lot of us kind of forget the things that are behind the scenes. So obviously I'm already coaching with Ed and with yourself, but that the 5 ways thing is always such a big thing for me. And as we've been doing the zero planning, without a doubt, getting that cash flow and budget, because things change so quickly.
Yeah.
Definitely.
Don't they, Amanda? They change so quickly, and a lot of people will do, I don't know, a budget for the year or a cash flow for the year, and they just ignore it. You know, it's most of the businesses, although it does take a little bit of time, should really be looking at that weekly.
Yeah.
I think once you get going on it and get, well, everybody, once you get it into a habit, like I like to say, just put in your calendar every Friday morning at 9 a.m. or whenever you've got a more free time, just to check. Even if you spend 10 minutes checking and you think, oh no, nothing's changed, that's fine. You've got that in there. And when it becomes a habit, it makes it so much easier to do, and you're not scared of doing it, and you can keep on top of it.
Yeah. Yeah,
I think one
you'll get.
I think one of the things I struggle with is as you were saying earlier, is I've got some things that go monthly, some things that are like yearly,
yeah.
and having to have to try and factor all of those in when I'm looking at what, you know, the cash flow is. You know, I need probably one of your magic spreadsheets, Flo, that's going to put some formula in so I can sort of, you know, see how that spreads out. It's easier when something goes out monthly than it is, I think, when it comes out as a lump sum, isn't it?
Yeah, definitely. And if you're having not cash flow problems, but if you're worried about cash flow or anything like that, and you can spread it out, or you can see that impact on that, once you've set these things up, and I can send you a spreadsheet, Jacqueline, and you can have a look at it and see that if this month, if this year I've put it in annually, this is going to be the impact, and that month's going to look like that at the end. But if I do spread it out, it's going to look like this. So you could have two versions of the same spreadsheet, one showing the monthly, one showing the annual, and see what that impact is, and whether it is a big impact, or maybe it's not as big an impact as you are worried about. Though this is where it's, once you've set it up, it's so easy and so nice to see how you can play around with your figures.
Yeah, exactly. It's being able to play, isn't it? Because I have got sort of like a forecasting sheet, but I know it's not completely right because of these monthly and annual things, and then I just get confused, so I don't do it. So I'd start out with the best intention, and yeah.
Yeah, stick it in your diary once a month or once a week, and then you can have a quick look and apply, and if there's anything changed, update it. But it is just about getting in habits, I think. And if anyone does have software that they use, there are some great, well, I know a lot of people use Xero, and if you use Xero, you can have a look at the cash flow on there. There's an automatic feature, so it makes it a bit quicker to look at. And there's also an app that I use with some of my clients called Float, and you can link it in, and there's a great feature on there called scenarios. And what you do with scenarios is you have your budget, and then in a different color, so you can click a drop down and it brings it up, or you can remove it really easily and quickly, and you can play around with, oh, what if I need an employee? Stick that in, that's going to be this a month. Oh no, can't afford that now. You can take it out or save it for another time. And then in another year, add that in again and see what it looks like. And it's fun to play around with these figures. And you've got the,
no, I can't believe it.
Oh, I love playing with cash flows. It's so fun.
To be fair, that's the power as well as the discipline, isn't it? Because the power is then within how much money am I losing by not doing that. So if you can imagine, like, you could forecast that cash flow coming up, and that meant that you could invest in something, so invest in some marketing or invest in a new resource, you know, new employee. But you could react in a timeline that allowed you to get that person into the business or do that marketing more quickly. And then you're going to get the impact of that, or the positive impact of that coming in. So that plan is key for that. I'm loving some of these comments on here around what people are doing. Carolyn, the fact that you've done this in Avon, now go and do it for yourself. I love that. Looking at budgeting, Nicole, we'll have a chat that you put in there that you want to talk to us both. We'll make sure that happens as well. Same to you, Kerry. And it's just lovely to see so many positive positive comments from here. It is around just doing that one little thing. You know where we are. We're here to help you. Thank you so much, everybody, for your engagement and spending your lunchtime with us. We had our lunch beforehand, so we won't spit sandwiches all over the camera when we're talking. But we've loved spending time with you, and hopefully we can do a little bit more. So I'm going to close there and wish you all a great rest of the week, and we'll all catch up soon.
Thank you, everyone. Thank you for attending.
Thanks. Bye-bye.
Thank you. Bye.